Let's go to the trading floor in Chicago and find out what the trade is talking about in the wake of all these government numbers here. I would imagine there was probably almost an audible gasp on the floor when they saw that report.
Oh, yeah, for sure. 100%. You know, the interesting thing is going into this report, especially with the corn, corn was pricing in, the options were pricing in about a 9-cent move. You know, right off the bat, I mean, it dropped about 11 cents right off the bat. Like you said earlier, it's down over 13 cents. So with that being said, it's a little bit of a surprise. I mean, the funds with record shorts all across the board, I mean, they nailed it. They nailed it right on the spot. With that being said, though, going into this weekend, I expect some short covering to happen and a lot of these funds to take some of that profit off the table.
We're talking with Scott Gecas of Walsh Trading. Scott, earlier, I think when we spoke in the last day or two, you were talking about the premiums on the options that you said at that point, I believe, were more skewed to the buy side, the call side, than the put side. That wouldn't necessarily be accurate for today's movement, would it?
Well, that's where options are a little bit unique. It's not more or less direction one way or the other. You know, there could be a lot of selling. There could be a lot of protection buying. I mean, that's what options are for, is for protection rather than just playing up and down. Mm-hmm. I mean, if you look at it as what options are mainly used for, I mean, people buy house insurance, car insurance for if anything bad happens. But what people do not buy insurance on is crops. They don't buy insurance on their 401k, their IRA, or anything like that, which that's exactly what options are for.
And I've had some analysts explain it that some will say the best thing could happen to you if you buy an option is that it expires worthless, that you don't use it because that means the market went the way you wanted it to. So exactly. There is that train of thought. All right, Scott, we'll come back here in a moment. We'll see what the livestock trade is doing. We're talking with Scott Gecas in Chicago. We'll be right back. Scott Gecas rejoins us now, and he is with Walsh Trading in Chicago. And now time to take a look at our cattle and hog market activity. And, you know, it's hard to find any plus signs almost anywhere in the ag commodity trade ahead of the weekend here, Scott. And let's dive into the cattle market first. We did have cash cattle trade out in the plains yesterday at around the 126 per hundredweight mark, and that would be a couple of bucks under what we had a week ago, and that is being reflected here in the futures trade today. The April contract there for a while was hovering around 126. Now we're at 125.88. That's down 65 cents. June down 63 at 119 even, and August down 72. On the feeders, with the big drop in the corn market, it's still not supporting the feeder cattle market. That's kind of intriguing. We have the April contract 42 lower at 145.53, and the May contract down 65 at 149.03. Lean hog trade today after a limit down day yesterday in most contracts. Let's see what the lean hogs are up to, and we have the April down just one tick, but you have the May contract $1.20 lower now at 82.47, and that is almost $2 off of its earlier high of the day. So we've been higher and lower. They really sold off hard early in the day, tried to rally back, and now it's pushing the downward side for the second time here today. A lot of volatility here. Scott, what's the story on the trading floor here with the livestock today?
Yeah, with the cattle market in particular, I mean, we're watching at 125 level. As soon as we had that close of below 128, that trend reversed to the downside, and it's been a continuous downtrend ever since then. So now our first support is going to be that 125 level. You can see that with confirmation with the option flow. You're seeing us start to build around the 123, 122 puts to the downside. Now it is also reversed when you're looking at the lean hogs. So there's still that whole upside that the import campaign is going to come through with China, you know, record levels and everything like that. So, I mean, you're seeing in May options, just May options, you're seeing a build in the 130 calls, which is way above where we're at. But either way, it is still building all the way up to the 130 calls.
About an hour and a half ago, Scott, there was a little blip in the market there on the hogs, and they came well off of those sharply lower opening trades that we had and actually went higher on the day, and we were wondering if there was some news rumor that came in on the floor, something maybe China related or something that made the market turn around like it did, and then it fell apart immediately after that again. Do you know what that was?
Well, that's the thing with rumors. They're just rumors, and nothing has yet been confirmed. So a few weeks ago, we had the rumor that China exported Chinese pork to the U.S., which doesn't make any sense. And then they were worried about African swine flu hitting the States. Now today, the reason why you've seen that blip was now they're talking about the African swine fever hitting the actual feed for the pigs. It still has not yet been confirmed, but we're keeping an eye on the headlines.
Wow. Okay. It's going to be a very choppy deal moving forward. Thanks, Scott, for all the information. I appreciate it as always. Scott Gecas is with Walsh Trading. He's located right there in Chicago.